All right, I do apologize for the interruption. I'm not sure if you guys want to see it as an interruption. It'll probably just be a continuation of the video, but let's continue. So, basic recap. What we're talking about is a daily time frame. So, price opened here, went all the way up, closed over there, opened here, no top wick. Price started moving to the downside, broke this structure, and that structure pushed back up. All right. Now, on a 4 hour time frame, it just depends where the market needs to retest. Doesn't even need to retest all that. It could be a situation where the market just needs to retest maybe a break of structure over here. Because remember what we're saying, guys, we're saying that this is an actual impulsive movement on a smaller time frame. Because if one candle can open here and go all the way down there and create a top wick like that to create a hanging man candlestick, this means that multiple structures were broken, right? And it also means that this was an impulsive phase. So if the market is not coming back and opening here, it needs to retest something, because during this movement, it never did any retest. It just went all the way to the downside. That's why we call it a reversal pattern. So from a 4 hour time frame, all you're going to see is a situation where it impulses down, or 1H even, right? And creates a bottom wick and then comes back and closes over here. All right. And then the next day, it could even just go up a tiny bit. All right. This is where other concepts come in, like FVG or whatever it is that you used to trade, or whatever it is you add to what I teach you. All right. But we're just waiting for creation of a higher low and then a continuation to the downside to fill in the wick. And hopefully the market can continue to push to the downside. So that's the basic theory behind the reversal candlestick that we're looking at, which is in this case, the hanging man candlestick. All right, let's move on to the next one. The next candlestick that we have is a shooting star. All right, it's another bearish reversal candlestick. So let's take a look at what happens with the shooting star. So let's move this to here. Let's also just illustrate this candlestick here. So everything we're illustrating for the reversal candlestick. So let's illustrate it with a line chart. So price opened here, right there, went all the way down, broke all the structure, came into this area here, right there, and then it did this, created a lower high, and then we want the market to continue pushing to the downside from there. Okay. So let's just put that as gray for now. Okay. So I'm gonna put this as our what? As our hangman candlestick. Okay, cool. The next candlestick that we're going to is let's clone this. Okay. Next candlestick that we're going to is a shooting star, another favorite candlestick. Okay. Shooting star candlestick. Again, we will take the same example as if we're looking at it from the daily time frame. Okay, and then after that, we're going to look at the last candlestick, which is a gravestone doji. Not really important, but it's quite important. Okay, so shooting star. Let's create some bullish candlesticks going to the upside. Same thing as here. So you've got a bullish candlestick over there. Got another bullish candlestick over here. All right, and then this time you can see that it creates a top wick first and then creates a shooting star candlestick. So there's your top wick there, and then you've got your shooting star candlestick over there. All right, so what's happened in this movement, guys? What's happened is that the market pushes off. Let's say this is a support. All right, market pushes off the support, closes here, opens there, immediately goes up. All right, and then here the market opens. It's green, it's bullish first. All right, so it goes up and then comes down like this. All right, and then it turns, obviously, because now it's a negative, or it flipped. It has now become a bearish candlestick. All right, so what you expect from this, you can expect, again, remember your bottom and top wicks are based on the series of the videos that we did on bottom and top wicks. All right, so you should understand that already. That's something we shouldn't have to go through again. But if you don't understand that, feel free to go back to those videos. So these are just retests. So in order for you to know where the market is going to create its bottom or top wick, you're going to have to go back to those videos and understand that your bottom and top wicks are just retests. All right. So for example, during this movement here, if there's something that still needs to be retested, the market would do that for you. Okay. Now, what's going to happen over here? If we've opened over here, the market goes up first, and then we've come and closed over here with this candlestick. So this is one candlestick. It opens here, goes up, all right, and then comes down, and then just that. Let's put it there for now. So this is what has happened for this candlestick here. Let's repeat that. The market goes up, opens here, goes up, goes all the way down, and it closes there. No bottom, no top wick in this example. Now, what does that mean for the next day? For the next day, that means that if we draw an illustration, let's put a line here, all right? If this was a support, okay, the market has closed there for some reason. This means that for the first part of the day, within this movement here, what is this movement, guys? This is an impulse, right? And you also have a break of structure. Template, let's put it as a rejection, support, supporting resistance, all right? So we've got a impulsive movement here with the break of structure. Your lessons tell you that there needs to be a creation of a lower high, right? This is the lower high that's then created over there. So the market comes back and creates a lower high. Doesn't matter where. Go back to the reversal, to the wick series for you to understand where it can retest, and then the market wants to continue pushing down. Okay, so this is the first candle, which is this one, and this one is the second candle. So the retest and going down is the second candle. So that top wick goes up and then goes to the downside like that. So that's an illustration for the line chart, or on a 4-hour time frame. This is exactly what you would be looking at, or a 1-hour time frame. You would be looking for a retest back into these areas, and then the market to continue to push to the downside. So obviously, if you see a reversal candlestick on the daily time frame, that is the most important one, because you know that for the first part of the day, for example, if this is GJ, you know that for the first part of the day, you're looking for a retest at Tokyo session. If the market can go up first, right? So it's bullish first, create a top wick or whatever area it needs to retest. Maybe the breakout structure areas here within the 1H and the 4H. All right. So the market needs to come all the way back up and retest here first before pushing to the upside, right? All the way back up, creates that top wick, and then continues to push to the downside. So this here will end up looking like this before it goes to the downside. All that is on a smaller time frame is a confirmation of a what? Confirmation of a trend, because now the market is creating lower lows and lower highs. That's all that it is. That's what your reversal candlesticks are. Okay. Let's move on to the next one. Let's make this a bit neat. So let's say that the wick came here. All right, when it came back, when it traded back below this resistance here, it came back and turned it into resistance again. All right, and then the market started pushing to the downside. So your entry will be over there. All right, so I hope you guys are understanding this so far. It is not difficult, guys. Please don't complicate it. It's just you looking for a reversal candlestick on smaller time frames, and then just understanding the theory behind it. I will look at 1 or 2 examples with you guys so that you see it playing out in the market. Okay. Should we continue with this movement? Let's continue with this. So here again, we've broken back below this area and retest again for the first part of the day, because we are looking at the daily time frame, right? And then the market continues to push to the downside. Okay. Let's do it like this. All right, just like that. Okay. Now, if we now go on to the next one, which is our gravestone doji, which is similar to the shooting star, but it's a bit different. Yeah, so again, we're looking at the daily time frame. The reason why we're using a daily time frame example is because, remember, the bigger the time frame, the greater the signal. So that's what I'm trying to teach you guys. If you see these on a daily time frame, they're even better. They can work on the 1 minute, 30 minutes, whatever the case may be, but they all work. Okay. Gravestone doji. What happens within a gravestone doji? Let's clone this. All right, let's put it to the right, and let's call this our gravestone doji. right? Which is another example of a bearish reversal candlestick. Okay. So we've got bullish candlesticks, all right, where the market opens, it goes all the way up and closes with a tiny, tiny bearish movement. Okay, let's do that again. So this one, let's have like strong bullish candlesticks because of how the gravestone doji is defined. And I will define it for you guys just now. And you understand why we need to have strong bullish candlesticks. Okay, so we've got strong bullish candlestick there. The market creates a bottom wick first before going up. All right. Uh, Again, that's another strong bullish candlestick. And then what we have here is, again, a strong bullish candlestick for the first part, right? And then the market says no. So the reason why we don't really have like the strongest indication for sells here in terms of the body of the candlestick turning red is because of the momentum that was being used to go to the upside. That's why it's a gravestone doji. And a gravestone doji has a tiny little wick here. Does it illustrate that here? It doesn't. But a gravestone doji is supposed to have just a tiny little wick there. Okay. Like that. So what this means is that when price was pushing up, it was pushing up impulsively, and then it goes all the way up impulsively again, but it fails to close bearish. All right, it starts to go down, but again, it still rejects just a tiny bit to show that bullish movements are still in power or still want to be in power. Okay, so we've got a reversal candlestick here, which is a gravestone doji. All right, so with this movement, what you just expect the market to do, again, remember it opened like this, just like that. And then it comes back and just gives you a tiny break of structure area. With these ones, usually you've got a tiny little retest and then the market just continues to shoot down. It doesn't even give you another opportunity in terms of retesting any structure above here. All right. We can get into a bit more theory when it comes to the gravestone doji, because when the gravestone doji goes up, like I said, it is impulsive and then it just closes back below here and then tiny little top wick and then continues to push down. At a later stage, it can then come back and retest. But with the gravestone doji, it's highly unlikely. It will just continue to push down. So if you take a look at even these momentum candles and compared to these ones, you've got strong bodies because it is strongly rejecting off this level here. So it doesn't give you an opportunity to get a proper retest. And the market just continues to push down from there. Okay, maybe you can get a little top wick there again, and then the market can continue to push down from there. All right, so that is your three most common bearish reversal candlesticks. As you can see, it just gives you an opportunity. It's like saying to you, okay, I'm ready for sales, right? But because you missed them, I'm giving you another opportunity to enter with the next candle. I think that's the most simple definition that we can give to our reversal candlesticks, which is the reason why we use those at our when we start to look for our trades. Because if we didn't, what we would say is wait for the break of structure and the creation of a higher low. And then as soon as you see it rejecting, just sell. All right. That's what we would say with our entry rules. So for example, here, we would just say, okay, let's sell here. All right. With the knowledge that this is a resistance area and the market is coming down. That's great, guys. Look how the market even sells. It sells and goes with you. All right. But now what happens if you had put your stop loss below here? The market now comes all the way back down with you, closes on this day, right? You've let go of all these profits, and then now you have to sit through another day where it can almost take you out and then go your direction. Just wait for the reversal candlestick to be formed. That's why we use reversal candlesticks. So we're saying that we don't really care about the first movement because the first movement is just letting us know what's up. And then our stop loss is there. Now we've got to take profit. Well, that is definitely going to hit. And then if we would like to enter more or hold our trade, sorry, we can actually do that because now we've hit our take profit. We've hit our take profit one at least because we know that, for example, with the hangman candlestick, we need to fill in the wick, right? When we fill in the wick, we put our stop loss to entry, and then now we can hold for other take profits if there are other take profits, because what's happened here is that we've broken structure, created a lower high. So what do we expect? The creation of another lower low. Okay, cool stuff. Let's move on to the next ones. Next ones that we're going to look at now are hammer candlesticks, which are the most common candlestick patterns that we can get in the market when it comes to our reversal candlestick when we're looking at bullish movements. Okay, so for bullish movements, we're going to take a look at support areas. Let's turn this into gray again. All right, so this is our support area. Again, let's look at it on a daily time frame perspective, which is the most simple, and for you to understand what you can be looking at when I teach you guys how to put this into sessions. So we're going to look at this as support. All right, so that's our support. And here we've got two examples only, so we don't really need the third area, but it's fine. Okay. Now, with a hammer candlestick, what's happening here? Hammer candlestick, we got a small body, small or no wick at the top, doesn't really matter. And then we got a big wick at the bottom. Okay. Again, here it shows that we were bearish. All right, with the presence of maybe even a bullish candlestick or a bearish candlestick, it doesn't really matter. This just means that we've got another opportunity to get a break of structure here, retest on a push up. Okay, so what's happened here is that the market opens, goes all the way down, all right, and then goes all the way to the upside. Obviously here, this is an illustration. So you can't get you can't get a close of candle here, and then it jumps and then opens here, and then goes all the way down and opens here. You guys can see that with this illustration, it's not wrong, but it just shows you only the most basic and simple form of a hammer candlestick that after a bearish movement, if you see it, look for buys. Even if you see here, it closes here, then jumps up a bit, you don't see a bottom wick here or anything. So this is just nothing but an illustration. Okay. Same thing with your inverse hammer. Okay, so if we put it in practical terms, you've got the market pushing down. Let's try and make it as practical as possible. The same thing that we did with our reversal candlestick when they were bearish. What color shall we make this? Red is fine. Background, red. All right. I prefer to make these lessons as realistic as possible, guys, so that you can see like where I'm getting this stuff from instead of doing like pre-recorded. When I say pre-recorded, is like actually doing them like already I record and it's the charts I've already drawn and I've already drawn the illustration. No, I want to show you guys how these are formed. Okay. So let's put structure there, obviously, because if you close there, there's structure. If you also closed here, there's structure. Let's make it a tiny bit more fun by doing a top wick over here. All right, and then the market pushes down. We don't have to have a top wick here, it's fine. Market pushes down, and then here, the market opens. All right, so we open, we go all the way down into the support. We are recognizing that this is a strong area of support. The market says, nope, I'm good. I want to buy. Okay, so let's start from there. Let's make this green because now it's flipped to bullish. And then let's put our hammer candlestick over there. Okay. Now, what does this mean? This means that price opened over here, all right, went all the way down, all right, and then went up and closed here. This gives an opportunity for the next candlestick to come and search here. Is there a break of structure? Is there support and resistance that hasn't been retested? Let's just use this. Comes back into this zone over here, which is a support, all right, line. Remember when we draw our support and resistance, we've got the line and the close of candlesticks. So maybe over here, there's like wicks and bottom wicks and retests and things like that. So the market retests there and continues to push up. So which one is your hammer candlestick? All right, your hammer candlestick starts from here, right here. This is the open, this is the low, this is the highest and the close. So this is your candlestick over right here. This is your candlestick that's illustrated on the line, and then this is your actual candlestick. Okay, so your next candle is the retest and a push up. So what happens here is that the next candle retests the structure that you have identified as a break of structure or whatever. All right, because we closed over there, we're going to come all the way up here. All right, so that's your bottom wick. And then let's do this illustrated properly. Goes all the way down, creates a bottom wick, right? And then starts to push to the upside. Okay, now what you have here, now you have a morning star candlestick pattern. Now that's something else. We can look at that at a later stage. Let's just keep it as basic as possible. Now here, obviously, now you've broken above a resistance again, which was structure previously. So your next candlestick, you expect it to give you a bottom wick. This is just theory. We will look at some examples if it's looking too easy. And then the next candlestick is supposed to continue pushing to the upside. All right. Without complicating things, that is your hammer candlestick. So quick recap, what's happened? The market was in a downtrend, creating bottom and top wicks, which showing that on a smaller time frame that was a trend. And the market says this is a strong support and resistance area. When it opens, it goes down because it needs to retest, right? Or it needs to get into that area. I can't just start moving up from here. If I start moving up from here at a later stage, the market is going to come back here, right there. That's when you see sometimes the market will do something like this. This is now a side lesson. That's when you see that sometimes the market will do something like this. And then immediately the next candle just pushes up. And then you send me messages, Matt, what happened there? All right. What that just means is that the market never actually touched that area here. So all the market has done here is that it's created a what? It's come and created a lower high at this structure here. After, let's say there wasn't a retest here. Let's make this interesting. The market broke back below the support and they never retested. So now it comes back and creates a lower high, dashes down. Now you think that price is going to go down. No, it means that it hasn't, because it didn't retest here, it needed to retest. And then instead of creating a hammer here, it now creates a huge bullish engulfing candle. And then what happens? The next candle now comes back and retests the structure, because obviously, as you can see, it is a key area. We can't break it now and just not retest it. And then the market continues to push to the upside. Okay. Simple. This is how, when we do the live videos, I always get questions like, but how did you know the candlestick was going to retest here before you went on to a smaller time frame? It's because I've taken time to understand my candlesticks. All right. So that's your hammer candlestick. Illustration. Let's just put the illustration here again. Remember, we're illustrating just this candle here, which is our reversal candlestick. All right. So what's happened? Price opened here, rejected, went all the way down. So this is the open. This is the lowest point. This is the close of candle right there. That's it. That's what your hammer candlestick looks like in theory. And then the next candlestick is this one, where it goes down to retest the break of structure, for example. All right. That's the bottom wick. And then the market continues to push up just like that. Okay. So lesson number one teaches you, what are you actually studying in lesson number one? You're studying the bottom wick. You're studying that bottom wick for you to be able to anticipate, because you got your confirmation for buys here. So on a smaller time frame, you're looking at the correction in order to catch the next impulse within the main session. All right. Hope you guys understand that. Let us continue to the next candlestick. Okay. Now, what did we say this candlestick was? This was a hammer candlestick. So let's just put that there. Hammer candlestick. Hope you guys are enjoying this video so far, and I hope it's making sense for a lot of you guys. All right. Next candlestick that we're going to look at is an inverse hammer or inverted hammer. One of my favorite ones, because I do have an example for you on this one, and I'll be able to show you guys as soon as we have finished with this example. Okay. So let's duplicate this. So we're going to call this our inverted hammer. I do have notes on inverted hammer and the study material, but I can create more notes. No, not a problem. It's an inverse hammer. Okay, what happens with an inverse hammer? We've got a downtrend again. All right. And then what happens is that the market goes down, closes here, right? And then the market goes down first and then pushes up and then goes down again. So let's do this. Let's draw. How do you want to illustrate this one? Let's illustrate it like, trying to find the easiest way to illustrate it. So I think we can illustrate it the same way, can't we? Okay, let's draw candles. We'll find a way to illustrate it afterwards. Okay. All right, perfect. So here we go. So what happens? What happens over here? We can create a top wick again, same example as the previous one. Um, Here we cannot create another top wick, just showing that we're in a downtrend. All right, because this is what it would look like. That, that, that. Okay, and then it opens here, right? Goes all the way up. Let's create a break of structure here. Let's do it like this. Let's say this candlestick has like a wick like that. So market opens up right here, all right, goes all the way up with the breakout structure because that previous candle's there, and then comes back and creates a higher low, which is where it closes. So this is your candlestick here. So can you see how a hammer candlestick goes down and then up? This one goes up and then down. All right. So with this one, with your inverse hammer, um, let's put it at the same point as this one. Okay, so opens here, goes all the way up. So that is the highest point over there. And the market goes down. Let's put a retest right there, over there. So this is the retest area. What does that mean? This gives the opportunity for the next candlestick to just continue to drive to the upside. All right, just like this. If the market then wants to create a bottom wick, whatever, it doesn't really matter there. But what matters is because it's different in every single scenario, right? Because you could close here, right? But then there's still something that needs to be retested this area here. Again, go back to the wick series and then you understand that. And then also your lesson number one, and then something like that. And then the market can then continue pushing to the upside from there. Okay. Here, based on what we've drawn here, we're saying that there's structures here. So the market will probably come all the way back down and create a bottom wick over here for this specific example. Because it closed above there, you can see there's structure here. So come back and retest that before continuing to put to the upside on this specific day. All right. There we can see there's structure again, maybe then comes back and retests again because there was structure there. And then it just continues to push up from there. Okay. Guys, these are very simple theories, or it just means you just need to study them. It's not something that's complicated. All right, so let's go through that again with the inverse hammer at support. All right, what it means that price close this candlestick closed here, and then it opened, it went all the way up to create the high, and then it came and closed here, giving us an indication that on a smaller time frame, we're now looking for a retest, right? Start looking for your entry confirmations on your 4H, obviously, if this is the daily. Once the 4H has given you a reversal candlestick or your entry rules that we always talk about, and then you can start taking your buys. Okay. Obviously now, because it's already given you a bottom wick, you put your stop loss below that bottom wick, right? Right there. And then you continue pushing up with it like that. And then there's your movement over. There's your movement over there. Push to the upside. Okay. These are the examples that I had for you guys today. I really hope that this was a simple video and that you can understand and you can relate to it. All right. Like I said, I do have an example on gold that I would love to show you guys that we can go through together, and then we can call it a day. Okay. For our take profit, that was nice yesterday. Okay. Let's stay focused. Let's go on to a weekly time frame. All right, perfect. Daily time frame. All right, what's happened here, guys? What the market has done is that it's broken structure. Perfect. All right, it's created a key support area. Perfect. All right, and then the market has also what? Has now broken structure again. So this is what you're more focused on now. There's your break of structure. After breaking structure, the market comes back and retests. So what's happened here? Impulsive break of structure, comes back and retests that break of structure, and then creates an inverse hammer. Now, what is happening within this inverse hammer candlestick? That is the question we need to ask ourselves. So this is our support, all right? And then if we now highlight this candle, which is the 25th of March, we want to go see on a 4-hour time frame how this candlestick was formed. Okay, 25th of March here. All right. So what did we say? What did we say is a hammer candlestick looks like? We said it looks like this inverse hammer, sorry, and then it does that, right? That's the form of the inverse hammer. So on a 4H, on a daily time frame, we see the inverse hammer, right? And then on the 4H, what do we see? We see on the 25th of March here, the market pushed up and then went down. And then this is how it closed. Now take a look at the next candlestick now. What candlestick is this? Still the 25th, we're good. All right, creates the higher low for us, which means that the next day the market was going to start pushing to the upside. There we go. Okay. So if we go on to the daily time frame now, you see that here it had a bottom wick first. All right, on a 4H, what was that bottom wick? The 4H was just it created a range here after closing on the 25th of March. Again, to remind you guys of the form was of a inverse hammer is that, inverted hammer is that and that. So within this area here, we're looking for buys. Now, we can see that the market dipped down a little bit within this candlestick. Let's go into a 1H to see what the market was retesting on this specific candlestick. Okay, cool. So the market was retesting this area here. All right. And then do you see how everything works together, guys? And then it creates a temporary high here, impulses up, all right? Creates another higher low, and then you can enter your buys even from after this. The market starts to push to the upside. Okay. Hope you guys learned something today. Please don't complicate your reversal candlesticks. They're very, very easy and very, very simple. I hope you guys have really taken into today's lesson. I did take time to release this video simply because I wanted you guys to focus on the wick video first, on the wicks videos, and then I'm going to start going into other candlestick patterns with you guys in the future. Hope you guys have a great Saturday. Goodbye.